This is the Asia Trade. I'm Shery in Seoul.
I'm Avril in Singapore. The top stories this hour. Asian stocks poised to open lower after Wall Street sees broad losses across stocks and haven assets. Oil jumping as the US sanctions Russia's biggest producers over the war in Ukraine. Tesla shares fall in late trade with profit tumbling more than expected. CEO Elon Musk trying to shift investor focus to robo-taxis and humanoids. Plus, we hear exclusively from South Korea's finance minister about talks with the US on Seoul's $350 billion investment pledge.
And I'm Stephen Engel in Shanghai, where executives, policymakers, and academics are gathering for the annual Bund Summit here along the banks of the Huangpu River in Shanghai. We'll get the outlook for China's economy and U.S. trade tensions with, among other guests, Yale Law School's Stephen Roach and DBS China CEO Ginger Cheng.
Plenty for investors to digest this morning, including a central bank rate decision from South Korea. The expectation, Avril, for the Bank of Korea to hold rates steady given financial concerns. Of course, we have seen incredible pressure on the South Korean won, especially given concerns about what the U.S. investment fund worth $350 billion during the trade negotiations would mean for that pressure and weakness we're already seeing in the currency. We did see a jump, though, in the South Korean won after our conversation with the finance minister of South Korea, talking about what the U.S. understands about the FX landscape here in the country. Take a listen.
Secretary Bessent fully understands the difficulties in Korea's FX market and is having internal discussions on how to respond to the situation.
On top of that, Shery, we are watching those moves in the US dollar. And overnight on the session, we did see momentum continuing to unwind. Think about that steep selling in gold that passed to a second day. And against this backdrop, if you look at the factors that are moving the markets, momentum is still the biggest one. It's gotten bad enough that it's spread to other sectors of the market as well. Even the smaller cap stocks, you're seeing that showing up in the Russell indices, for example. Meme stock index also coming off. And I guess this also doesn't help that we are seeing some of the earnings that have been very resilient of late. If that disappoints in a way that Tesla seems to have, that could be quite unhelpful for markets as well. Shery.
Yeah, the EV maker falling in the after-hour session, right? Earnings missed estimates despite record EV sales. And that was an interesting development because we had seen, of course, customers really rushing to get those tax credits for EV purchases until September when they expire. So we saw that spike. But in the after-hour session, we are seeing the downside on the Tesla shares. We also saw some downside and some really fluctuations around the meme stock frenzy. So we had Beyond Meat also under pressure. We pressured the broader markets. We also had concerns about U.S.-China trade negotiations, with the U.S. now said to be considering those restrictions on software exports to China. So plenty for investors that had to digest all of the different idiosyncratic news, including, of course, the latest on U.S. sanctions on Russian oil producers, which is what's leading to that really spike in oil prices. And, of course, we'll be watching those oil-related stocks and sectors across the Asian session.
Absolutely. You're really seeing that reaction in Australia's stock markets at the open. Energy-related names, that is the sector that is gaining the most when the rest of the market is opening pretty tepid. That continued decline in gold-related stocks, which, of course, a day ago was a big drag on the markets. You talked about the U.S.-China tensions. It's really interesting how, if you look at dollar China, they seem pretty unbothered by the whole thing because implied volatility has actually eased off. So we're going to be watching that as well as Tesla suppliers in the session, Shery.
So let's turn to our top story and what could potentially move the energy sector in the Asian session today. The U.S. announcing sanctions on Russia's largest oil producers in its strongest effort yet to pressure President Vladimir Putin to negotiate an end to the war in Ukraine.
We canceled the meeting with President Putin. It didn't feel right to me. It didn't feel like we were going to get to the place we have to get, so I canceled it. But we'll do it in the future.
Mr. President, can you tell us a little bit about why you're elevating sanctions against Russia right now?
I just felt it was time. waited a long time. I thought that we'd go long before the Middle East. And Mark, as you know, we did the Middle East plus 7, so we did 7 different wars.
For more, Bloomberg's Michael Heath joins us now with the latest. But Michael, I mean, this seems like another shift in tone coming from President Trump. But will it make a difference when we've already seen several rounds of sanctions and other punishments for officials in Russia?
Yeah, Shery. Look, it's not going to make any immediate difference, but it's definitely a step in the right direction. I mean, these are the first sanctions that President Trump has introduced against Russia in his second term. So I think there's a significant move there. One of the things that wasn't mentioned in the clip that you just showed was President Trump saying that whenever he talks with Vladimir Putin, they have these great conversations and then they never go anywhere. So it seems like, 9 months into his presidency, he's sort of starting to get with the program that that Russia is going to try and stall the US, it's going to try and stall any sanctions, and it's got no intention of stopping its campaign. So imposing these sanctions on Rosneft and on Lukoil. Rosneft is the big state-owned oil company. It's run by Igor Sechin, who's a close ally of Putin. Used to be one of his tightest advisors before he was elevated to that position. And Lukoil is sort of a private concern, very, very close to the Kremlin. They're big oil suppliers. They account for a lot of Russia's budget and national income. So they're going in the right place. And the other thing they'd need to do, and we've seen some indications of this with efforts to get India to stop buying Russian oil, and I suspect there'll be efforts with China as well, is to just try and crimp the finance Russia has, the funds it has to prosecute its war. It's not going to stop the war, but it just makes it harder, and it demonstrates to Russia that there is resolve in the West to stand up to this, because Putin has always bet the West would give up, it would get bored, it would fracture, and he'd end up winning. So it's really about showing that we're here for showing that the West is here for the long term.
Mike, I wonder then, Trump's caution on using these ultra-long-range missiles into Russia, is that counterproductive, sending a mixed signal then?
Yeah, it does to some extent, Avril. I mean, there's a bit of an interesting thing going on. The Wall Street Journal reported that the US had lifted restrictions on the use of Storm Shadow missiles, which were provided by the UK, and they use a US guidance system. And once President Trump came into office, he transferred the US has to sign off on these launches. He transferred that from US Command in Europe to Defence Secretary Pete Hegseth. That's now been transferred back to Europe, to the American Command in Europe. So there's a bit more freedom, as I understand it, for Ukraine to deploy these missiles. Now, they've got a range of about 180 miles. What Ukraine has been after is US Tomahawks, which have a 1,000-mile range and could strike deep into Russia. Now, President Trump said that this talk of a change was fake news, but it's sort of almost like he was referring to something slightly different. So, look, it doesn't change the game, but it allows Ukraine to strike back. I mean, we just saw yesterday Russia again bombarding Ukraine. It's targeting its energy sector ahead of winter. Obviously, in that part of the world, it's very, very cold in winter, and it just makes life miserable for people. So, Ukraine does have a chance to respond here with these longer-range missiles.
Bloomberg's Michael Heath there. President Trump also saying that he plans to speak to China's Xi Jinping about Beijing's purchases of Russian oil when the two leaders meet next week in South Korea. Let's bring in our China correspondent, Bibi Lo. A lot on the table when it comes to that sideline APEC summit between the two leaders. What are we expecting on the Russian oil front?
Yeah, President Trump is just adding more items on the agenda in his talk with President Xi, and now he is talking about ending the Russian-Ukraine war, and he wants to seek President Xi's advice. He thinks that Xi has a huge influence on Putin, and he wants to talk to China about its purchases of Russian oil and energy. And he seems to think that President Xi will be very receptive to that, but I'm not so sure, because the threat of these secondary sanctions have always been hanging over China, and China this year actually signed a gas pipeline deal with Russia. It has ramped up energy purchases. Last year, we saw a record amount of buying 100 million tons of crude oil, which is close to a fifth, 20% or so of China's energy imports. And it would be quite costly for China to shift its import to other countries because obviously it's buying these sanctioned energy at a cheaper price. So this is something that President Trump wants to speak to Xi about. He also said that it's going to be a very wide-ranging talk. They're prepared to speak for a pretty long time, he said, and rare earth is just going to be the least of it. They'll talk about soybeans, they'll talk about tariffs, and potential curbs on software. That's also something that we just reported today, a White House official confirming that they're considering potentially broad curbs on China as well.
Yeah, talk to us a bit more about that move reportedly, because what is also interesting is that the U.S. had implemented similar moves with Russia. What are we seeing in terms of this reported move on China?
Yes, reportedly, and Reuters was the first to report this, the U.S. is considering similar moves that they had implemented on Russia. They're planning to perhaps do that to China as well, and this is in retaliation to China's rare earth export controls. But we know that President Trump had previously hinted at potentially, placing controls on all or any critical software to China. Right now, it's not clear how sweeping this would be, whether it would include just U.S. software alone, or whether there would be this extra territorial element to it that would affect foreign products that rely on U.S. software. But either way, it's going to have huge impact on both the Chinese and U.S. economy. And Scott Besson was asked about this. He said everything is on the table when it comes to export controls, whether it's rare earths or engines. And he said it's going to be coordinated with other G7 nations as well. And another thing I want to point out is that Mark Rutger, the NATO chief, is in the White House this morning. And he spoke to President Trump, and he said that China is a key enabler of Russia's war in Ukraine. And this alliance or alignment between President Trump and NATO countries, that could be something that is of concern to China as well.
Min, thanks for providing the context for all these latest developments. Bloomberg China correspondent Min Lo for us. Also coming up on the Asia trade, we talk market strategies with Natixis and Fibonacci. Plus, Yale Law School Stephen Roach and DBS China CEO Cheng. Join us live at the Bund Summit in Shanghai. Much more ahead. This is Bloomberg.
Tesla's third quarter profit plunged more than expected as sharply rising costs undercut a record quarter of vehicle sales. Adjusted earnings for 50 cents a share was down 31% from a year ago, a sign of the pressure automakers are facing from shifting trade policies. Let's bring in Bloomberg Auto reporter Keith Naughton. And Keith, we saw, of course, customers really rushing to take advantage of the EV tax credits before they expired, but that really wasn't enough.
Yeah, because what investors are concerned about is those EV sales are about to fall off a cliff now that the U.S. government has taken away the $7,500 tax incentive for buying a battery-powered vehicle. So what you're seeing with Tesla is their costs have gone up, as you've said, including tariff costs of about $400 million. But overall, their costs went up by 50%, and that really cut into earnings. That's why they fell by 31%.
Keith, so Tesla, I guess, not immune to these cost pressures that others in the auto industry are facing. But also interesting on the call was Musk's talk about robo-taxis, about humanoids. I mean, is that enough to convince investors of its longer-term plans in any way?
Yeah, I mean, that is what investors have been trading Tesla as if it were an AI company. It's opposed to an auto company, but it still makes its money by selling electric vehicles. And they've had 4 straight quarters of declining profits in that regard. That's how they're financing this future of robo-taxis and robots. So it's important for the car business to still throw off good revenue. The free cash flow has improved from the car business, so that's a good sign. But you need a robust car business to finance this robo-taxi future.
Where are Tesla shares right at the moment? And what do these numbers tell us about the future trajectory of how investors are pricing this company as an AI-related play?
Right. Well, over the past year, the shares have more than doubled. But what happened today is when this miss happened, shares fell during the conference call with Elon Musk. Shares fell further. So, there is a reaction by investors that there's a concern about the car business and what the future holds, especially as U.S. policy is moving away from encouraging sales of electric vehicles and back to encouraging sales of traditional gasoline-fueled vehicles.
Keith, thanks very much. Bloomberg Auto reporter Keith Norton there with the latest on Tesla earnings. And as Keith was just outlining there, shares of Tesla have doubled. Given how it's faring after hours and the backdrop of how overall U.S. earnings have been resilient, what does this mean for the momentum trade? Let's bring in from our Tokyo studio Jean-Francois Robin, Global Head of Research of Natixis CIB. Jean-Francois, great to see you. So we are looking at U.S. earnings, trying to unpack what has been pretty resilient of late, the tariff impact as well. Does what you're seeing in the market concern you, or is this more of a short-term consideration?
I think the market was very resilient, a little bit maybe optimistic about this trade war, because with this summer pause on tariff, we tended to forget that tariff is still the favorite word in the English, or at least in the Trump language. So he likes very much the tariff. So this trade war is not on a pause mode. This is still very much going on. So I think what we are seeing is a decoupling between big economies. And we see that with rare earth on one side, with chips, with software on the other side. We see that the world is accelerating its transition toward something much more regional, much more friend-shoring way of doing things. So the supply chain is massively changing these days. So the market was a little bit optimistic on saying, this is a rosy scenario. We know where the tariffs are. We can organize ourselves. Companies are having some good earnings. But now the future is still very, very much uncertain in this context. This is the end of the globalization as we knew it. There was a lot of front-loading so far. So the good numbers that we see maybe are just a taste of what was in the past, not in the future.
And I guess the trade war 2.0 has gone on long enough for us to ascertain who the winners and losers are shaping out to be. But I wanted to get your thoughts, what we're seeing for the moment in the markets, particularly in gold as a haven or as a risk asset. Do you see more of that unwinding coming before we actually find a floor?
No, this is very interesting because we see a record high for stock market, but at the same time you see gold skyrocketing. So something has to give here. So it's very interesting to see as well what's going on with the dollar, because we are very much into some kind of de-dollarization. Gold is probably a symbol of that. Stable coin and Bitcoin as well on this matter, because people are buying stocks, US stocks, but they are hedging their dollar these days. So it says a lot about, yes, we are optimistic about NVIDIA prospects, expected earnings, but on the other side, we don't know yet much where the dollar is going to be. So gold is a new dollar in this context, but probably as well this is a good edge against future volatility, because what is very, very striking today is that you have a record high of uncertainty if you look at the uncertainty index of the Fed, for instance, but at the same time you see the VIX, the move, so the volatility of the market very low. So again, something has to give here, and gold is a good edge on this on this kind of a trade-off between volatility of the market, which is low, and big uncertainty, which remains, and we see that every day with new tariff, with new developments on the trade war.
With the dollar under pressure, of course, we are seeing on the other side of that trade a lot of emerging market currencies gaining ground. Not to mention that these EM countries, some of them also are very exposed to the gold trade. How beneficial will it be for some of the non-developing, the underdeveloped regions and the assets on those EM classes?
Very good question. It very much depends probably on your share of the world trade that is going to be affected. Again, it's depending on where you are sitting in terms of the supply chain. So it's a very back to idiosyncratic risk for emerging countries, for instance. But the big picture is the following, is that probably dollar will be less dominant in the future. At the expense of the dollar, you will see probably rising alternative currencies. You can think of Brazil, you can think of India, Indonesia, Australian dollar. So probably you will see a bunch of reallocation between this usual dollar-dominated trade, which is still the case. The world trade is holding up very well, again, because and thanks to front-loading. But when the trade war fully impacts the world economy and the world trade, probably you will see some rebalancing. And then we think that the dollar should be still a little bit on the downside path compared to other currencies, including probably emerging. We see that with China, for instance, and China trade is down double-digit figures with the US, but is up double-digit with Southeast Asia, with Africa, with the rest of the world. So this is going to reshuffle the dynamic of currencies as well.
When it comes to the ongoing trade tensions, especially between the U.S. and China, we continue to see more threats about restrictions on software exports to China, China restricting rare earth materials as well. Given the exposure of tech and how much exuberance has already been in that sector, what does this tell you about the rally that we've seen in AI-related sectors and stocks?
Yeah, this is another question mark on the valuation of AI these days, because you have all this concentration of valuation, which is a bit eye-popping these days. You have this big, well, again, the PE, and if you look at the Case-Shiller ratios, you can see that we are the highest. Last time we have seen this kind of ratios, it was during the dot-com bubble. So it cannot but worries me a little bit when I see this stretch valuation. But having said that, for now, this rare earth thing is more of a problem for the defense industry, for an auto industry, more than for NVIDIA, for instance. And what we see again is the very, very strong reorganization of the supply chain here again, because we see this agreement with Australia. We are finding a lot of rare earths in Germany. Remember that the biggest rare earth producer of the world in the 90s were in France, for instance. So we are having a lot of rare earth everywhere. We just need to find a way to produce them again, but it's going to take time. So it's more an adjustment process. We don't have any lack of rare earth. We have a problem of producing and refining them. So it will take time before we're reshuffling all this. So yes, in the meantime, it could be another risk on the valuation of tech.
Jean-Francois, Robin, good to have you with us, Global Head of Research of Natixis CIB. We have more ahead on the Asia trade. This is Bloomberg.
Amid the continued momentum unwind, gold prices slipping, and against that backdrop, of course, tracking Australian miners, the gold-related stocks, which were the big drag just a day ago. Bucking the trend today, though, is the stock of Fortescue, because its first quarter shipments of iron ore showed strong Chinese demand for steel-making products, so relative resilience despite concerns of a possible supply glut. But we're also watching some of the energy-related stocks in this session, Shery.
Yeah, supply glut could be an issue for oil as well, but we are now seeing jumps in the price of oil given U.S. sanctions on Russia's biggest oil producer. JP Morgan, though, thinks that a resolution to the war in Ukraine will have no impact on the oil price. We'll be watching those energy names across trading in the Asian session today. We have more ahead. This is Bloomberg. Take a look at how markets are trading early in the Asia session. The staggered open in Australia leading to downside of 0.4%, although energy stocks are leading gains given, of course, a jump in oil prices on U.S. sanctions on Russia's biggest oil producers. Nikkei futures pointing to the downside after Japanese stocks already fell in the last session. U.S. futures not doing much after we saw some of those momentum trades unwinding in the overnight session. Let's go to the annual Bund Summit beginning today in Shanghai as well, bringing together policymakers, academic leaders, and senior financial executives. Our Chief North Asia correspondent, Stephen Engel, is there for us. Steve, so what should we be expecting from the summit?
A lot of dialogue. That's what we're going to expect, and no better person to kick off our coverage this morning at the Bund Summit here on the banks of the Huangpu River in Shanghai and the financial district across the river is Stephen Roach. He's a Yale Law School senior fellow, also, of course, the former chairman of Morgan Stanley Asia. Thanks so much for having you,
Steve.
Always great
Glad
to talk
to be
to
here.
You. I mean, I'm sure you have lots at the forefront of your mind right now, but let's talk about the upcoming possible Xi-Trump meeting on the sidelines of APEC. How high are your hopes for that to kind of stabilize the relationship? Because again, Donald Trump is threatening tariffs upwards of 155% because they can't seem to find ground, while they're trying to find leverage, they can't seem to find ground on certain export controls.
Well, you know, leader-leader summits are always important in terms of the cosmetics, the press and media coverage, but they rarely accomplish little. I've studied them back to the first summits with Mao and Nixon. We've had 22 major leader-leader summits between the U.S. and China since then. I'd say 2 or 3 of them have been major world-moving events. The rest have been blah, including the last one between Biden and Xi Jinping in San Francisco. So I don't expect much, but I think it's good that the two leaders will meet.
What do you think could move the needle, though? Obviously, both sides are building leverage for which they could possibly make concessions. Whether it's soybean purchases from the United States, might be too late already. The harvest is deep into the season. But also, of course, rare earths and then semiconductors on the other side.
Well, I think what we'll most likely see, is another taco move on the trade threat from President Trump. He's done it once before. There's no reason to think he won't do it again. And he's already alluded to the fact that, he's probably going to fall back from his threat of an additional 100% on top of the pre-existing 30 to 50. He can't really make up his mind on what that is. But, China's got some powerful strategic options that it has deployed recently. Most importantly, I think the rare earths export controls that they've imposed, which is really causing potential pressures on global supply chains and on U.S. manufacturing.
Did the U.S. underestimate the bargaining chips that China actually does have coming into this second major trade war between Trump and Xi, if you will? You can call it that.
Well, I think the U.S. has always underestimated China's bargaining chips. We view in the United States as a relationship that's a one-way dependency, that China depends on us and we don't depend on China. I've written 2 books. I'm actually starting a 3rd on codependency, where we both depend equally on each other. And I think China is demonstrating the two-way nature of this important economic and security relationship.
Yeah. 6 months into, since Liberation Day and the launch of all these tariffs, what does your research tell you that the net impact has been on the U.S. economy? We're baking in already a couple of Fed cuts. Where's the inflation specter going to be as we keep on going down this road?
Well, I look back and what I wrote on Liberation Day, and the actual impacts have been slower and more gradual to occur than I and most others thought. But there are clear signs of goods inflation, especially in certain categories like furniture and some consumer appliances, where price increases are picking up due to tariffs. And I think what I would take away from this experience post Liberation Day is the impact is slower, albeit it's still in the direction that most of us had expected.
You care to weigh in at all what your op-ed highlighted, and that is the damage that potentially is happening to the U.S. because of the executive order process, as the tariffs have been executive orders and not through the two chambers of Congress, and what that is necessarily doing to undermine American legitimacy?
Well, I think what you're referring to is I wrote an article several months ago called America's Cultural Revolution that was pretty controversial and got a lot of pushback from my former friends in the United States. They said, how dare you compare this to the most wrenching social and political upheaval the world has seen. My point is revolutions are relative compared to pre-existing norms in any system. And compared to the norms that we've had in the United States prior to Trump 1 and especially Trump 2.0, this is a dramatic shift from the standpoint of executive overreach, from the standpoint of trade policy, from the standpoint of our alliances with the rest of the world. And that's an important point that I would like to stress here. Unlike China's Cultural Revolution, which had no impact on the broader world because China was a tiny, isolated economy, America's upheaval will have a major global impact because of our role in the world.
Do you find that China, though, has weathered this turmoil fairly well or better than in the past because they've found their bargaining chips, whether it's rare earths and magnets, and they've built up their own domestic AI industry, and they're developing their own AI chips. They're buying soybeans from Argentina and Brazil, not the United States. They've built in those buffers, but they have troubles. They've had 3 consecutive years of deflation. There's a race to the bottom. Some call it, Huang Yiping, who we'll talk to later, says it's a rat race to the bottom. So they have some structural issues. How do you see the need for the priorities shift in this next 5-year plan, which the top Beijing leaders are concocting right now to boost consumption, to bring the imbalances back a little bit normal?
That's a key area I've been focusing on for longer than I care to remember, and it's more urgent now because of many of the structural problems you just alluded to, Steve. The property sector, for example, is dead money for the foreseeable future. Exports are booming, but the world is pushing back, even outside of the U.S. I think there's a protectionist backlash, and you wonder how much China can continue to diversify away. The investment sector, which has been booming, is now 40% of GDP. How much higher can it go? So they need a new source of growth, and the Chinese consumer is that source. They've been talking about that since 2007. I've written about it since then myself. And, the debate is endless. It's tedious. And I think they have to be much more aggressive in establishing a target for what they're trying to achieve in the upcoming 15th 5-year plan.
They want a target that they can reach, and you're saying about 50% household contribution to GDP.
I'm saying they need to have an explicit target of boosting the household consumption share of GDP from currently around 40 to 50 by 2035. And the Chinese are good at hitting targets. They can do it. They just have to figure out a way to do it.
Last question, since we're in Shanghai here. There's been a lot of talk, obviously, globally about maybe there's this trend towards de-dollarization, but very difficult to do. Are there any particular steps that you think we should be watching out for from China, or that they've already done with cross-border agreements and swaps and the like, to get the renminbi to be more international? And how do you see Shanghai and Hong Kong playing those roles?
Yeah, this is a debate we've had for a number of years. But what's different about it is that the dollar is now under significant downward pressure for many of the reasons that we were just alluding to in the United States. The executive overreach, the open-ended deficit spending, the high levels of U.S. debt, and the shortfall of domestic saving, which leads you to big current account balances. So there is some gradual diversification. The question has always been, if you don't like the dollar, where do you go? The renminbi is still small in terms of its global presence, but the Chinese are putting a lot of pieces together that will probably make the renminbi more attractive over a longer period of time as a global reserve currency.
Can they do it, though, with a closed capital account?
No, they have to open the capital account, they have to continue to build the capital reform infrastructure in China. They've made a lot of steps, especially in the equity market, but they've got a lot of work to do in terms of international currency markets.
Stephen Roach, always great. Thanks for kicking off our coverage here at the Bund Summit in Shanghai.
Thank you, Steve.
Don't be a stranger, sir.
Have fun.
All right, great to see you. Okay, guys, back to you. We have a full slate of great guests here at one of the most premier financial events on the calendar in China. Back to you.
And already a great start to coverage with great conversation with Stephen Roach, Stephen Engel for us in Shanghai. Of course, much more to come from the Bund Summit in Shanghai. In the next hour, DBS China CEO Cheng weighs in on their mainland business and real estate exposure. Later, the Amundi Investment Institute discusses market strategy. And former ECB Governor Jean-Claude Trichet shares his global outlook. More ahead on the Asia trade. This is Bloomberg.
South Korea's finance minister says trade talks with Washington are now focusing on the structure of Seoul's $350 billion investment pledge rather than a currency swap. The won jumped near a session high on Wednesday on the news. We spoke exclusively to Yun-Cheol about the progress of negotiations.
지금 베센트 장관은 한국의 외환
Besant has understood that due to the current state of Korea's foreign exchange market, we cannot pay up front. He understands that. However, regarding how to proceed on this, with negotiations currently underway with the U.S., I ask for your understanding that I cannot yet provide specific details on the plan.
Bank of Korea Governor Lee Chang said that the maximum amount that can be raised in dollars annually without market disruptions is $20 billion. Are we looking at around those figures right now?
예, 저희들이 maximum.
Yes, the Bank of Korea currently estimates that the maximum amount we can raise without significantly impacting the foreign exchange market is $20 billion.
What does that mean for upfront payments, though? Does that mean front-loading some and then paying annually?
그런 부분.
Regarding that aspect, we are keeping various possibilities open for the foreign exchange market and are currently in negotiations with the United States.
Because that's one of the options that you've talked to Secretary Besant and to Washington about.
그것은 제가 지금 확인하기가 어렵고요. 다만
I cannot confirm that at this time. However, Secretary Besant fully understands the difficulties in Korea's FX market and is having internal discussions on how to respond to the situation.
Because of the potential financial shocks to South Korea, there was a lot of talk about a potential currency swap agreement. Is that still on the table?
통화 수합은 미국과 한국 간의 이
Whether a currency swap is needed and to what extent will depend entirely on how the deal is structured. It may not be necessary at all, or it could be arranged on a smaller scale. Therefore, the currency swap itself is a necessary condition, not a sufficient one. So, depending on how this deal turns out, we plan to consult with the U.S. regarding the currency swap aspect as well.
통화 수합이 된다고 인해서
Even if we have a currency swap, it will be difficult to just blindly provide money to the U.S. without considering the commercial rationality or viability of the project being selected.
I'm understanding then that this option is still alive. If that's the case when it comes to perhaps the structure, could it be something similar as to the Argentina style going through the Treasury instead of directly from the Fed?
지금 이 통화 수합에 대해서는 우리가
Regarding the currency swap, we're not doing it because we lack short-term foreign reserves like Argentina. It's a situation where Korea needs foreign currency to make long-term investments as requested by the U.S. So the U.S. must provide the lacking foreign currency. Therefore, it doesn't align with the conventional short-term currency swap structure. So, regarding that aspect, if we were to engage in a currency swap arrangement with the U.S., there are further points that require discussions.
The South Korean won at 1,400 per dollar. Is that the new normal? Do you think that reflects fundamentals?
지금 가장 영향을 많이 받는 부분이 이 관세.
We believe much of the recent depreciation reflects market concern that the tariff negotiations haven't been finalized. So, we are currently pursuing negotiations with the U.S. within a range that doesn't significantly impact Korea's foreign exchange market. Fortunately, U.S. Treasury Secretary Bessent is fully aware of the situation in Korea's foreign exchange market. Therefore, once the issue is resolved, that uncertainty will likely fade.
We have seen clearly the impact on South Korean automakers because the tariffs continue to be, of course, much higher than for Japan, for Europe, who already the U.S. has lifted those levies. What can the government do at this point to support the sector?
일단 단기적으로는 지금
In the short term, the government is providing all possible policy support to automakers and auto parts companies facing difficulties due to these higher tariffs compared to the EU and Japan. We believe that if these negotiations yield some breakthrough, those issues could also be resolved.
In these ongoing trade negotiations, is the fact that South Korea would lose its advantage over, say, Japan before the trade deal, because Korea had a free trade agreement with the U.S., it had an advantage of around 2.5%. Is that being discussed at this point?
예, 그런 부분을 제가 트럼프 대통령께도 말씀을 드렸고.
I conveyed that point to President Trump and explained to Bessent and Lutnick. I explained that since Korea is an FTA partner, tariffs on Korea are already sufficiently low, but tariffs on other countries aren't sufficiently low, making it unfair. Even so, it seems the U.S. isn't very willing to understand that aspect. In any case, we plan to continue explaining and persuading them.
Because of the exuberance around artificial intelligence, we are seeing South Korea's stock market on a tear. Are you concerned that this could be a market bubble?
예, 지금의 주식 시장은 한국 경제에 대한 기대.
The current stock market reflects expectations for the Korean economy, such as enhancing shareholder value in the Korean capital market, expanding dividends, or resolving unfair practices. Expectations for the modernization of the Korean stock market. On top of these expectations, we are actively supporting the core technology economy to ensure a robust Korean economy that can be a global investment destination.
South Korean Finance Minister Yun-Cheol there, and that conversation actually led to that spike in the Korean won late in the trading session yesterday. Of course, those implications about the U.S. understanding the FX stance from South Korea. And we are now seeing Kospi futures trading like this. We have seen an incredible rally already for South Korean stocks. We're seeing record highs, the longest winning streaks in September of last year, futures pointing to some downside. We are expecting the Bank of Korea to hold rates unchanged for a third straight meeting today. There are concerns about the property market, about financial stability. More ahead on the Asia Trade. This is Bloomberg.
You're watching the Asia Trade, and as we count down to markets opening in Japan, worth noting how the stock market has been on a tear, breaking record after record. But some analysts warn of a near-term correction. Our senior stocks reporter Hideyuki Sano joins us with the details on this. Hideyuki, I guess we got a sort of taste of this with SoftBank's decline just a day ago, even amidst a lack of very clear drivers. Talk to us about how this rally seems to be narrowing and the risks surrounding that.
Good morning. Yes, exactly. So if you look at the stock benchmarks like Nikkei, it almost looks like the Japanese stock market has had a very smooth rise. But if you look closer to what's going on, you can see that the rally is narrowing. So far this month, even though the index such as Topix has risen more than 4%, actually almost about 40% of shares have declined. Now, when this rally began or re-accelerated in July, the number of decliners were about 20%. So you can see that the rally buying has been concentrated on a very small number of shares such as SoftBank and other AI-related stocks. And also, if you look at the trading volume, you can see a similar pattern. The ratio of the top 10 most traded stocks is at a historical level. So at the moment, the top 10 most traded stocks account for 42% of the entire trade. Now, that's a very high level, and the average is about 31 over the past 2 decades. So clearly, there are signs that the rally is driven by a very small number of stocks at the moment.
And a big part of that rally, of course, was a Takaichi trade and those expectations of more fiscal spending, easy monetary policy as well. Given that now she's prime minister, could that rekindle some fresh buying in Japanese shares?
Right, and so bulls hope that Takaichi's policy might trigger rotation out of those very hot stocks to broader market. And you could argue that yesterday we may have seen such rotation because steel makers and automakers have risen quite a lot, while SoftBanks and other AI shares dropped yesterday. But having said that, if you look at the performance of the Nikkei over the last 2 months or even the last 6 months, it's hard to deny that the market has risen so much. And the Nikkei now is trading at 20% above its 200-day moving average. And if you look back, in the past few years, when that happens, the market has going to correction every time. There may be hopes, but at the moment, the risk reward seems to be tilted to the downside.
Hideyuki, thanks so much. As we speak, we're seeing futures pointing to that downside at the open of trade today. Bloomberg senior stocks reporter Hideyuki Sano for us. Now checking some of the stocks to watch when trade opens in Korea, Japan shortly. It's the Tesla suppliers. They may move after the EV giant's profit plunge more than expected. We're looking at these adjusted earnings as well and how these costs really undercut that record quarter of vehicle sales for the EV maker, Shery.
And take a look at how futures are setting up. We have seen some downside for Kospi futures after we already reached that record high. Nikkei futures also losing more than 1%, extending those declines that we saw in the previous session. Do watch out for those energy producers given U.S. sanctions on Russian oil majors. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens as we're expecting the Bank of Korea to hold rates steady this hour. We actually saw the Korean won jumping in the previous session as the finance minister told us, Avril, that the South Korean government is focusing on the structure of the U.S. investment pledge when it comes to these trade negotiations.
Yeah, and in terms of trade negotiations, think about next week as well when these ASEAN, APEC meetings get underway. So that's something we're going to be keeping an eye on as well. For the moment, in terms of the geopolitical backdrop, it's about those sanctions that the U.S. is putting in place on the Russian energy majors as well, Shery.
Which is why we saw oil gaining ground in the early Asian session with those energy producers spiking in Australia as well. Take a look at how the Nikkei is coming online. Not a lot of movement right now, but this, of course, after falling in the previous session. But remember, the Nikkei has surged more than 24% this year already. And we do have a new Prime Minister, Takaichi, ordering a fresh package of economic measures. You can see the topics down 0.7%. The Japanese yen holding steady, very close to 152 per dollar. Take a look at how South Korea is trading. We saw a record high, the longest winning streak since September of last year. 6 sessions of gains were under a little bit of pressure, more than 1% at the moment. And this, of course, as we heard from the finance minister on that structure of the U.S. investment pledge, also about how the U.S. understands South Korea's stance when it comes to its FX market. You can see the Korean won right there at that 14.31 level ahead of the Bank of Korea policy decision.
Yeah, we'll watch the continued moves in FX, but as you highlighted as well previously, that is this continued momentum unwind. We are seeing, though, in terms of the reaction to the U.S. sanctions on Russian oil majors, that the spike because of the incremental news and how the markets were positioned previously, that short squeeze is showing up in oil prices. So energy-related names are moving on up, although it is also worth noting that despite gold holding losses, that some of the gold-related names are actually recovering from the steep declines of a day ago. We are seeing treasuries more or less moving sideways, futures in the U.S. pointing to further downside, and as I said, Brent prices are moving higher, almost 3% for the moment, Shery.
Avril, let's discuss all of this with Cheng Yun, founder and CEO at Fibonacci Asset Management Global. Really good to see you again in person here in Seoul. Avril just mentioned some of that downside in the U.S., and we also had some tensions over the U.S. weighing potential software restrictions when it comes to exports to China. We have, of course, those threats about restrictions when it comes to rare earths coming from Beijing. What does this all mean for the tech and AI trade?
So when it comes to U.S. move, a lot of move from the Trump seems to be more tactical rather than strategic. So right now we're on the cusp of closing an important trade deal, and it seems that U.S. tends to increase the pressure on all sides before entering concession in the end. So while there's a short-term squeeze in the market, we think it's only temporary, and there's more room for the upside because every time we saw the dip resulting from the political tension, it eventually resolved and the price went up, actually.
South Korea, very heavily exposed to the tech trade, of course. We have seen an incredible rally on the Kospi already. It could be the best year in decades. Take a listen to what the finance minister had to tell us when it comes to the potential that this could be a market bubble. Take a listen.
지금의 주식시장은 한국 경제에 대한 기대.
The current stock market reflects expectations for the Korean economy, such as enhancing shareholder value in the Korean capital market, expanding dividends, or resolving unfair practices. Expectations for the modernization of the Korean stock market. On top of these expectations, we are actively supporting the core technology economy to ensure a robust Korean economy that can be a global investment destination.
What do you think? Is the rally sustainable?
I think so. The government is pushing to open up the market, and a lot of initiatives have already been taken. And we haven't had this kind of a robust and strong action from the government in decades. So there are a lot of rooms to catch up, and Korea discount phenomenon has been going on for more than a decade. So we could see some high upside when the global investors finally realize that there's a structural change here in Korea.
Jung-in, we are watching out for developments potentially next week at the APEC meetings. Maybe we see the Chinese president and his U.S. counterpart meeting as well. What do we need to see at some of these related summits in order for there to be follow-through in the markets and further upside?
So U.S.-Korea trade has been not certain because both parties seems to be talking about terms that's not negotiable. I think Korea cannot possibly deliver $350 billion upfront because of its size of FX reserve. So there has to be some concession, and it will be a dramatic concession because both parties must yield a lot. But if we do reach a deal, I think a lot of uncertainties regarding Korean exporters will be lifted up, and that can give a surprising upside to the market. So we already saw the Kospi rallying nearly 10% this month. We could see another spike in the price. However, if there is no deal, then it's a problem. It's actually a big problem, and uncertainties will persist, and we'll probably see a lot of recent gain in the Kospi diminish in the short term.
It's interesting because I think for the moment at least there is some optimism based on what the South Korean finance minister has been telling Bloomberg, that at least Besson seems to be aware of the complications this might pose for the FX market. But I also wanted to get your thoughts on the Value Up program and how that affects fundamentals. Are you seeing enough momentum and enough follow-through in that regard?
So in terms of the Value Up program, I think we're still taking baby steps. I think the development is still at the infant stage. We haven't really saw the influx of foreign capital with the basis of Value Up. A lot of times it's FX related, or it's earning related, or geopolitical tension related, but not the government initiative. I think when we see a structural change and we'll see a lot of legislation passing this year, then foreign investors will start to take a look more seriously, which will add to the upside for the Kospi.
In Japan, we saw a new measure of new economic measures, a package from the new prime minister. How much upside can this provide in a market where the rally has sort of narrowed now?
So if you look at the strength of Japanese yen, it has shown some weakness, and that's natural because the new administration is mimicking what Shinzo Abe did years ago. So we'll see more physical outflow and more easy monetary policy. I think BOJ will try to refrain from hiking too much. So we probably won't have another hike until first half of next year. And for that reason, it's causing weakness in Japanese yen. Also, the reflationary play is taking some strengths here. That's why we saw the level up in Japanese equities. However, the inflation is a concern. If we see a much stronger than expected inflation in Japan, that momentum can diminish, and I think it will give an opening for Koreans.
An opening for Koreans.
Korean exporters. Yeah.
Korean exporters. Just super quickly, APEC next week, Trump-Xi meeting, how much of a risk for broader upside across Asia?
So if they actually meet, that meeting itself will be a positive sign. There's uncertainties whether the meeting will actually take place, because both parties tend to play not meeting as a card or option to pressure each other, right? I think a meeting will be fantastic if there's any talk, plus. But even if they schedule for next meeting, that's going to create a positive vibe in the market.
Talking about talking, right? Cheng and Yun, always really good to see you, founder and CEO at Fibonacci Asset Management Global, joining me here in Seoul. We have more. This is Bloomberg.
I think we'll make a deal. I think we're going to make a deal on the rare earth is the least of it. Look, the tariffs are much more powerful than the rare earth. The rare earth is a disturbance, but there's a lot of rare earth around. I'll tell you, I've had more calls on rare earth. We've got it, everybody's. We'll make a deal on, I think, everything. I think we're going to make a deal on soybeans and the farmers. I think we're going to make a deal on maybe even nuclear. You know, President Putin in his call mentioned to me about nuclear, where we do a de-escalation, and I'm fine with that. I think it's good. I think it's a very appropriate thing.
President Trump, ahead of his likely meeting with China's Xi Jinping next week in South Korea, he says he plans to speak to China's Xi about Beijing's purchases of Russian oil when the two leaders meet next week. Let's bring in our China correspondent, Min Lo. So, Min, how much influence do you think all this might actually have on Beijing?
Yeah, I mean, you heard President Trump just now flaunting that everybody has rare earths, but I think it will really take the U.S. a long time and many years to catch up with the kind of expertise and supply chain that China has built up over the years. But he is saying that he wants to talk with President Xi on Russia as well, saying that President Xi has a huge influence on President Putin, and he wants to discuss China's purchases of Russian oil. But this is a very sensitive issue for China because it's been buying these sanctioned energy at a cheaper price, it would come at a great cost to China to diversify its supply away to other countries, because last year it ramped up purchases to a record 100 million tons of crude oil from Russia. That's about a fifth of its imports so far. And it also signed another gas pipeline deal earlier this year as well. President Trump, though, appears to think that President Xi will be very receptive to this discussion, and he has been setting quite a positive tone, saying that they will have a very good deal, a very wide-ranging one as well, where he said they will discuss everything from soybeans to tariffs to fentanyl and, of course, the Russia-Ukraine war.
But there are so many hurdles there, right? Especially with the White House now also said to be considering broad software curbs on China as well.
Yes, and the timing is surely not a coincidence here, right? The White House now saying that it's considering these curbs, and clearly a threat of punishment to try to increase their leverage there. And this comes after President Trump also hinted some time back that the U.S. could consider export controls on any or all critical software in response to China's rare earth controls and its shipping levies on U.S. ships, which, by the way, was started by the U.S. But now Scott Bessent is saying, when asked by reporter, he's saying everything is on the table when it comes to export controls, whether it's rare earths, whether it's software or engine parts, and the U.S. is going to coordinate with other G7 nations. And so when it comes to U.S. software, it's not clear now how sweeping it's going to be, whether it will target only U.S. software or whether there is this extraterritorial component where they target foreign-made products relying on U.S. software and restricting the usage of those by China as well. That would be pretty far-reaching, and of course, we'll have to see how China would respond to such a threat and how it shapes the trade talks next week.
Bloomberg's China correspondent Min Lo there. Let's actually delve into those sanctions when it comes to Russia. The U.S. announcing these levies on the largest oil producers in that country, in its strongest effort yet to pressure President Vladimir Putin to negotiate an end to the war in Ukraine.
We canceled the meeting with President Putin. It didn't feel right to me. It didn't feel like we were going to get to the place we have to get, so I canceled it. But we'll do it in the future.
Mr. President, can you tell us a little bit about why you're elevating sanctions against Russia right now?
I just felt it was time. We've waited a long time. I thought that we'd go long before the Middle East. And Mark, as you know, we did the Middle East plus 7, so we did 7 different wars.
For more, Bloomberg's Michael Heath joins us now with the latest, a shift in tone from President Trump.
Yes, very much so. I mean, as we've sort of discussed over the weeks, it does wax and wane his attitude towards Russia and Ukraine and what he intends to do and the path forward in trying to get a breakthrough in that conflict. But I mean, it's even though it will take time for these sanctions to have any effect, these, as you mentioned, are the 2 biggest oil producers in Russia. Rosneft is the state-owned behemoth. It's run by Putin's close confidant, Igor Sechin. Lukoil is the big private company as well. And these companies account for a lot of tax revenue for Russia. So it is an important signal, particularly also as it's the first sanctions under the second Trump administration against Russia. And President Trump sort of seems to have tried every avenue to speak with Vladimir Putin. He's always believed he had some sort of connection with him, which presumably it's become clearer to him now that's probably not a reality. So, yeah, I mean, what Min and what you were referring to earlier about China and Russia is going to be quite significant as well. I mean, as the West sanctioned Russia, China has really stepped in to become, the main partner there with Moscow. And in Russia, a lot of Chinese cars being driven, all sorts of business dealings going on between the two, whether it's pipelines, whether it's oil sales. So that's a major factor in financing Russia's war.
So, Mike, it seems like every avenue being used when it comes to the financing aspect. But what about on the battleground and taking options, including using long-range missiles? He's talking about how it's complex to use. I mean, what are his considerations at this stage?
Yeah, Avril, I mean, President Trump, the Ukrainians have been asking for US Tomahawk missiles, which have a range of 1,000 miles, so could strike very deep into Russia, which is obviously a massive country, and getting at its war, its infrastructure for war. Some of this stuff is in Siberia, or, a long way east. So Ukraine would like that. President Trump suggested that Tomahawks are only valuable when the US uses them. That may be the case, depending on the technology and the expertise there. What Ukraine has done, though, is that it deployed UK-made Storm Shadow missiles, which have about a fifth of the range, about 180 to 200 miles, and they hit a plant in Russia. That's related to the war, that was about 100 miles inside. The Wall Street Journal was reporting that the US had lifted, bars on using the Tomahawks, because the Tomahawks have a US guidance system, so America has a final say on that. President Trump said that was fake news, but just the fact that they have started using them, and that there's been a transfer also of who makes that final decision on whether the Storm Shadows can be used has been moved back from the Defense Secretary in Washington to the US Command in Europe. It does seem like they have eased up there. But again, I mean, Russia has been hitting Ukraine very hard, targeting its energy infrastructure ahead of winter, and there's been civilian casualties again when they've hit Kiev, the capital. So, I mean, the war still progresses. There's not a lot going on the front line because it's a very, very attritional battle, but Russia's really, really hammering Ukraine hard, and these long-range missiles give Ukraine, along with its own drones, an option of fighting back at least.
Bloomberg's Michael Heath there with the latest on U.S. sanctions on Russia. Of course, that sent oil prices higher. We are seeing energy-related stocks gaining ground. Take a look at how South Korea is trading, though, because we're seeing broad downside. Even the energy sector is losing ground, down more than 1% for the Kospi. But this, of course, after 6 sessions of gains already, the Kospi still near record highs, the longest winning streak since September of last year. It's been a major year for South Korean equities, more than 60% gains this year already. You're seeing the Korean won at the moment weakening a little bit, but only after jumping to session highs in the previous session. All of this after South Korea's finance minister told us the trade talks with Washington are now focusing on the structure of Seoul's $350 billion investment pledge rather than a currency swap. We spoke exclusively to Yun-Cheol about the progress of negotiations.
Besant has understood that due to the current state of Korea's foreign exchange market, we cannot pay up front. He understands that. However, regarding how to proceed on this, with negotiations currently underway with the U.S., I ask for your understanding that I cannot yet provide specific details on the plan.
Bank of Korea Governor Lee Chang said that the maximum amount that can be raised in dollars annually without market disruptions is $20 billion. Are we looking at around those figures right now?
Yes. The Bank of Korea currently estimates that the maximum amount we can raise without significantly impacting the foreign exchange market is $20 billion.
What does that mean for upfront payments, though? Does that mean front-loading some and then paying annually?
Regarding that aspect, we are keeping various possibilities open for the foreign exchange market and are currently in negotiations with the United States.
Yes, that's one of the options that you've talked to Secretary Besant and to Washington about.
I cannot confirm that at this time. However, Secretary Besant fully understands the difficulties in Korea's FX market and is having internal discussions on how to respond to the situation.
Because of the potential financial shocks to South Korea, there was a lot of talk about a potential currency swap agreement. Is that still on the table?
Whether a currency swap is needed and to what extent will depend entirely on how the deal is structured. It may not be necessary at all, or it could be arranged on a smaller scale. Therefore, the currency swap itself is a necessary condition, not a sufficient one. So, depending on how this deal turns out, we plan to consult with the U.S. regarding the currency swap aspect as well. Even if we have a currency swap, it will be difficult to just blindly provide money to the U.S. without considering the commercial rationality or viability of the project being selected.
I'm understanding then that this option is still alive. If that's the case, when it comes to perhaps the structure, could it be something similar as to the Argentina style, going through the Treasury instead of directly from the Fed?
지금 이 통화 사업에 대해서는 우리가
Regarding the currency swap, we're not doing it because we lack short-term foreign reserves like Argentina. It's a situation where Korea needs foreign currency to make long-term investments as requested by the U.S. So the U.S. must provide the lacking foreign currency. Therefore, it doesn't align with the conventional short-term currency swap structure. So, regarding that aspect, if we were to engage in a currency swap arrangement with the U.S., there are further points that require discussions.
South Korean Finance Minister Yun-Cheol speaking to us exclusively. We're also watching out for the Bank of Korea rate decision this hour. Do stay with us. This is Bloomberg.
Here are some of the top corporate stories we're tracking. IBM shares fell in late trading after the company reported disappointing revenue in its Red Hat unit, sparking concern among investors. Third quarter sales in the hybrid cloud unit that includes Red Hat increased 14%, missing estimates. CFO Jim Kavanaugh says the company still feels good about growth opportunities for Red Hat. Google is claiming a breakthrough in its quantum computing chip called Willow. The company says it ran an algorithm on the chip that can be repeated on similar platforms, outperforming classical supercomputers. Google says the advances point to a broad range of potential users in medicine and materials science. Bloomberg has learned that Chinese chipmaker Yangtze Memory is considering an IPO in mainland China at a valuation that could exceed $40 billion. Sources say the company may seek a valuation of around $28 billion and is working with banks, CICC and CSE Financial. Separately, Chang's Memory Technologies is also planning to go public onshore. Shery?
Yeah, Avril, we're watching Tesla suppliers in the Asian session as well. We had Tesla falling after hours. Earnings missed estimates despite record EV sales. Customers rushing to take advantage of the EV tax credit expiring in September. That wasn't enough to offset those operating expenses, which soared 50% to $3.4 billion in the quarter. Adjusted earnings were 50 cents a share, down 31% from a year ago. We have more ahead. This is Bloomberg.
Now, with the U.S. sanctioning Russian oil majors, we are seeing that spike in crude prices. And this is coming against the backdrop of how markets had been positioned previously. So vulnerable to any incremental change. And we are seeing these spikes, the short squeeze there. For the moment, some of these Asian energy counters are in the green, including Woodside. That is up about 3.5%. Shery? And, well, Shery, we are also looking at some of these.
Yeah, we're seeing that decline for the second day. 2 days losses of SoftBank by more than 7%. SoftBank launching a $2.9 billion bond sale. They're returning to the overseas bond market. Second time this year because Avril, of course, they are really launching this aggressive fundraising push for AI led by the company's bet on OpenAI. Also, take a look at how futures are trading at the moment, because we had seen U.S. futures pressured a little bit by Tesla's fall in the after-hours session, missing estimates, although their sales were at record highs. You can see TAIEX futures down more than 1%, and 850 futures also closing to the downside of 0.3%. Of course, we continue to watch all of the trade negotiations ongoing, and the U.S. said to be considering broad software restrictions on China. Let's turn back to the annual Bond Summit that begins today in Shanghai. Stephen Engel is there and standing by with our next guest. Steve.
I've lost.
Right. We're checking if we do have Stephen Engel right now at the Bond Summit in Shanghai. Steve, do you have us?
Yeah, I do have you now. Just a little technical glitch. We're back up online now, obviously at the Bund Summit here in Shanghai. And our next guest is Ginger Cheng. She is the DBS China CEO. Thanks so much for joining us. A little heart-stopping moment there, no problem. We got it going well now. Obviously, you oversee the China business for the Singaporean bank, DBS.
That's right.
What is your priority this year amid, obviously, the noise geopolitically, the tumultuous nature of the Chinese economy, trying to gain some footing and some confidence and end deflation? What is your priority right now?
Thank you, Stephen. Thank you for inviting me to join you here in Shanghai. Maybe I talk about some good things first, our strategic priorities. First of all, I think wealth management becomes a very important initiative for DBS China and also for the group. I think there is a permanent shift of the wealth management industry in China. The high net worth individuals are more matured, and they look for safe assets and diversification of asset allocation.
So a diversification more to safety because of the uncertainty, or what?
And also because they learned a lot of lessons in the past few years because of a real estate, the trust products, and all these, right? So I feel this is a permanent shift of the mindset of the investors. So they look for safe asset, especially they look for offshore asset allocation. This creates a lot of opportunities for somebody like DBS, who has a headquarter in Singapore, and we're also very big in Hong Kong, right? So this is, I see that this trend will continue for many years to go.
So where does that lead to the inevitable question of hiring private bankers? We did see a number, about 40 new bankers by the end of this year, largely in Singapore, because you've already built
Singapore
up
and
Hong Kong.
That's right.
But how about on the mainland as well?
Okay, for mainland, I think we still have a lot of opportunities because, a lot of people's wealth still in China. They can't move everything into Hong Kong and Singapore. So what we're trying to do is that we'll hire more fresh graduate, and also we'll train up our own relationship managers. In fact, 10 days ago, our group CEO just opened our new International Treasures Wealth Center in Shanghai, which means we upgrade our branch into a wealth center and also try to connect them with the international asset allocation, the knowledge, the know-how, expertise of a DBS Group. So we're trying to do that for other branches in China in the coming 3 years.
Now, a lot of the mega rich, if you will, in China who are looking to diversify and looking to go overseas as well, they tend to be younger than the average billionaire, if you will, in the West, sometimes by as much as 20, 30 years even. So we're talking 30-year-olds, 40-year-olds. So how is their risk appetite different now, and given their age and their ability to have many more years of growing? So are they going into much different products, and is that what you're offering, a much different portfolio?
Those are typically, whether it's a new tech money, or they could be the second or even third generation of the entrepreneurs here in China. Those people are pretty sophisticated. Typically, they're educated in overseas, so they have a very strong mindset of how to manage the risk and how to do the allocation, compare with their fathers or grandfathers. So I feel that they look for someone who can give them advice how to reinvest the money. And they're also very international, as I mentioned, that typically educated in overseas. So they will buy in someone who can provide valuable advice to them, right? So that's why I think international bank in this area will play a very important role.
What kind of assets under management are you looking at for where there's the family offices and also your overall wealth management portfolio for this part of the world? I saw a number for the family offices at about $1 billion AUM. Is that the ballpark, and where do your targets?
In fact, for China, that our starting point is not very high. It's the treasures, like in Singapore and Hong Kong. It's typically the RMB 1 million AUM as a starting point. Of course, someone will put more money with us. And in China, we offer a diversified product like funds, insurance, and even US dollar equities or Hong Kong listed equities through QD and other structured products. So this also differentiates ourselves with Chinese banks who are also very focused on wealth management. And in Singapore, Hong Kong, of course, we have a very big presence in the full range of wealth management segments, right? Treasures, TPC, and offer private bank. So they can offer, all type of products in the global market.
Is there anything in particular that would impact your bank the most that you are watching for as the leaders gather in Beijing right now behind closed doors? They're coming up with the next 5-year plan, the 15th 5-year plan.
Yeah.
What would be the most important development coming from that would help multinational banks like you to grow their presence on the mainland that would be in line with what they have pledged, and that is more opening?
Okay, first of all, I think further opening up of the financial market is very important for a financial institution like us. We would like to have more capital flows in and out, right? We would like to have more QD quotas so that we can help the client to invest in overseas. Of course, we already get some license that because of opening up, because, for example, we set up security companies, majority owned by DBS Group back to 3 years ago. So we can do the IPOs and all the equity-related business in China. But of course, we would like to have more opening up. So, for example, give more license to international banks so that it can do more business here in China.
Well, that kind of dovetails nicely to the next question, and that is there was about 18 different deals signed, I believe, in the last week or so between Singapore and China. Some big, some tiny. One was DBS and Guotai Haitong Securities.
That's right.
But no details. So what is that? You talked about you'd like to see more of a brokerage presence here. That is a brokerage. What would this entail?
Yeah, in fact, the strategic collaboration between DBS and Guotai Haitong is to leverage on each other's strength. And I would say that mainly for DBS and Guotai Haitong to work together to support the Chinese corporate going global. Yeah. Right? This is, as I mentioned, that this is a very, very big trend that I think will support the economic growth of China. And nowadays, I see not only the industry leaders, but their so-called the whole supply chain is moving out to overseas, mainly to ASEAN, also go to Middle East, Africa, and even Latin America. So for the financial institutions like in China, they typically lack of network and expertise in overseas. So that will create a collaboration between DBS and the Chinese financial institutions.
Ginger, great having you here in the first day of the Bund Summit here in Shanghai. Let's do it again.
Thank you. Thank you, Stephen.
Thanks so much. Okay, Avril and Shery, going to send it back to you. We've fixed the gremlins in the system. We're running with full boil right here from the Bund Summit.
Yeah, it's all systems go for the moment. Stephen, thank you so much. Our Chief North Asia correspondent, Stephen Engel, in Shanghai for us. Now, as we watch those Chinese consumption trends, Chinese tea chain Chagee says it'll stick with its strategy of premium products at higher prices, largely staying out of price wars across China's consumption space. Co-founder Xiangmin spoke exclusively with us about that decision and the company's global growth ambitions.
In the previous 2 years, our business expansion focus was the Chinese market. This year and next year, we will have more business expansion in overseas markets, especially in the second half of this year and the first half of the next year. Southeast Asia will become an important focus for our market expansion.
So you have opened 2 stores in the US so far. How has sales been like, and what is your expansion plan in the US?
We've seen strong performance from the newly opened stores in Los Angeles. On the opening day, our sales has exceeded 5,000 cups, which is an outstanding performance for us. The American consumer indeed has the strongest purchasing power in the world, and the U.S. market is one of the most valuable markets for us. There is no doubt as to how much we value it. The U.S. market has been playing a leading role in global consumption trend.
Has the US-China trade war had an impact on your business, especially in the US?
When we talk about political geography, we don't think it's particularly relevant for our consumer companies. From the point of view of making a product, we think that having a good taste, a good smell, and good look, also even the good experience in our stores, these are the things that our consumers mostly cared about. To us, there is no impact on us.
This summer, we had seen a very intense price war. How big of an impact does that have on your business?
We did not fully participate in the price war. It has some impact on us, but we believe this is only temporary, and we hope this is a continual process of value building. Domestic sales this year has been better than the same period of time last year, but overseas sales has seen bigger growth.
There has been talk about how Chagee is looking to become the Starbucks of the East. What lessons are you learning from Starbucks, and what challenges do you face in trying to be this very unique and ubiquitous brand in China and across the globe?
Starbucks is a great company which has always been a role model for us. I think Starbucks, through decades of development, has been able to bring coffee to the world. We also hope that, like how coffee culture develops, we would like to take tea culture to go further. This has always been our goal and idea.
Chagee co-founder Xiangmin is speaking exclusively with Bloomberg's Min Lo in Shanghai. We have more ahead on the Asia trade. This is Bloomberg. We're watching the energy sector across trading in Asia today after the U.S. sanctioned major Russian oil producers. Secretary Rubio now saying that the U.S. would still like to meet with the Russians, that they had a good call with Secretary Sergei Lavrov, and that they will follow up on that. We are seeing the energy sector as one of the big winners in today's session in Japan, although the rest of the market is seeing some downside of the Nikkei of more than 1.5%. 2 companies that are under pressure, Tokyo Electric and Chubu Electric. Now, they have a joint venture, JERA, which is now set to acquire an interest in a shale gas asset in Louisiana. It will make an upfront investment of $1.5 billion. Of course, we have seen more Asian countries trying to increase investments into the U.S. as those trade negotiations continue. Over in Japan, the new Prime Minister Takaichi also ordering a new package of economic measures aimed at easing the burden on inflation on households and businesses. Economics and government reporter Yoshiaki Nohara joins us now with more on this. Yoshi, what do we know about this package?
So she made an order right after her cabinet started, and she's saying that the #1 priority for her administration is to help people tackle inflation, cope with the inflation. So that's what she's trying to do with this package. But we don't know about how big is this going to be, and also whether the extra bond issuance will be needed. We didn't get clarity from new finance minister Satsuki Katayama either yesterday.
And of course, the focus shifts to that meeting next week as the Japanese leader hosts the U.S. president. What are we expecting out of that meeting, out of Takaichi?
Right. So that's one of the big events for Takaichi, next week. Not only next week, but probably to set the tone of her premiership going forward. She's expected to strike, tone of continuation in terms of relationship with the U.S. And she's probably going to try to project an image that she is willing to do more. Japan is willing to do more its part for defense purposes, because it's one of the areas that President Trump has been asking for Japan to do more.
Yeah, they're expected to align when it comes to that hawkish stance when it comes to defense, right? Yoshi, how are we expecting her views to have a long-term impact on the Japanese economy, also the market reaction?
So she has taken this job with high expectations that she's going to be supportive of aggressive fiscal spending and also at least promoting the trying to hit brakes on the Bank of Japan's policy normalization, and that's why stocks have been rising even though they're down today. So meaning that so she's going to meet the test for her is that whether she can deliver to meet those expectations, given that she is saying that her policy will be also responsible in terms of fiscal spend. So she's not just saying that she's preferring the expansionary fiscal spending, but she's going to be responsible about it.
The Takaichi trade. Yoshi, thanks so much. Bloomberg's Yoshiaki Nohara for us. More hits on the Asia trade. This is Bloomberg.
We have breaking news out of South Korea. We are getting the Bank of Korea leaving the policy rate unchanged at 2.5%, as expected by most economists surveyed by Bloomberg. Of course, we had seen concerns about a hot property market here in Seoul, also a weak Korean won, which is past that 1,400 level per dollar. So most economists, 23 of 25 surveyed by Bloomberg, had forecast a rate hold at 2.5%, and we're getting the rate decision right now unchanged at that 2.5% level, which would be the third straight meeting where the Bank of Korea is not moving. Let's bring in Bloomberg's Korea economist Jean-Francois. Pretty much expected, but what are you looking out for in the wording in today's statement for an indication of where we're going?
So the key question today is, whether the BOK is running its course of the easing cycle or it's still maintain its easing stance. So from my view, BOK, I expect the BOK probably remain in the easing cycle. So waiting for that further signs of property market stabilization, because government imposed a pretty strict household lending curbs and also, the property transaction curbs. So BOK is waiting for a signs of, property market stabilization, and then it might have some confidence. It might cut interest rate as early as November or in January, I think.
And the thing is, right now, given the slowdown in the Korean economy, the Bank of Korea needs to do this.
Right. So as you mentioned that that so far the economy has rebounded from the trough in the first quarter, but I see the economy will slow down from this quarter because it faces a stronger headwinds from higher U.S. tariffs. So that even if the economy grows around 1.6% from my forecast, the economy still runs below the potential level, which means that the economy needs more support. So, the BOK needs to support the economy by cutting interest rate.
If it were to continue on its easing cycle, November, January, as you say, how would it balance this against the risk of the currency weakness if already markets are worried about this investment pledge, direct investment to the U.S., and what that's going to mean for FX?
Right. So the Korean won is under depreciation pressure, particularly because of the uncertainty about, as you mentioned, that 350 investment fund between South Korea and the U.S. But we now expect the Fed will cut interest rate this year and next year. So it will put, the depreciation pressure or weaken dollar. So it will, somehow keep some appreciation pressure on the Korean won. And at the same time, if as the government now says that they make some announcement or make a deal, the uncertainty would resolve. That will also make Korean won a little bit stronger.
Are there any concerns about the tech sector? Because, of course, tech is such an important part of South Korea's exports. But now that we continue to see the trade tensions between the U.S. and China and more potential restrictions on this industry, could that factor into the equation from the BOK?
Yeah, well, that's an important factor. But at this point, you know, that demand for semiconductor is so strong, but probably you know, in the longer run, that is a really important risk. But at this point, probably a stronger demand for semiconductor will just is the bigger factor for the economy growth. Yeah.
Song, thank you very much for running us through the considerations for the Bank of Korea as it kept rates unchanged today. Bloomberg's Korea economist Sung Kwon for us. And let's take a look at benchmarks as well. Of course, that continued unwind in momentum and growth as well. Those are the lags or the drags on the market. Following on from Wall Street's handover overnight, we are seeing tech stocks getting hard hit. Energy-related names tracking crude prices are, of course, a bit of an outlier. For the moment, you are seeing the Japanese benchmark sinking about 1.3%. Those steep declines there following on from earlier in the week where we saw both Japan and South Korea stocks hitting record highs, Shery.
Yeah, perhaps some consolidation, right? You said it, the Nikkei has rallied so much, more than 20% this year. The Kospi has rallied more than 50% this year. So we are seeing some downside, as you mentioned, but also because of those idiosyncratic news, right? I mean, we are seeing gold under pressure. It had already rallied to record highs, considerations about where the Fed is going, also where oil prices are going, a little bit of a spike today because of the U.S. sanctions on Russian oil prices. But at the same time, other commodities, a little bit of a drag. Perhaps iron ore, for example, metals, given that we're factoring in Chinese demand to come. That's it from the Asia trade. The China show is next. This is Bloomberg.